All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Interesting day since I jumped off video earlier this morning, and a few fireworks out there in the market. But ultimately, in terms of its effect on the challenge, not that dramatic. I pulled it up. I was in the car and I pulled it up just kind of seeing what was going on. And, one of the things I'll look at just to see if there's anything, massive position wise is I'll look at the bottom line, profit loss on the day. And it was down like 100 and then it was up like 100 and I'm like, well, the market's moving a ton, but challenge trades sure aren't moving very much. And it's been that way most of the day. Yeah, GOLD was up and then it went negative. Halliburton was up, then it went negative. So they just kind of flip flopped. JP Morgan, it was up 70 cents, went down like 80 cents. Now it's trying to go green again. Maybe just ticked red a second ago. So it is, we're seeing some dancing around, but just not going anywhere. There's nothing that I'm going to change for the challenge here. We're not on our exit dates here. Tomorrow comes in with gold and Halliburton. The red dates come in with those. Hopefully Halliburton gets a little more sell on it. We can, continue to hold it, looking for that sell-off. We'll see kind of how they play on out, but nothing to change or adjust here with them going into the close. Now, there also are no new triggers on the board. I'll show you the scans here in just a little bit, but, nothing new on the board to go and to jump into. But let's take a look at the price action here on the coronavirus because what did we see? What did we see come out? Well, it was news that from the World Health Organization that maybe some of the numbers aren't accurate, some of the reporting isn't accurate, and just some general concerns about the coronavirus. And we saw a dump, right? In fact, from high to low, we're almost 50 points, right? Almost 50 points here on this sell-off, which is over 1%, right? Over 1% here for it, and one of those that typically has some more significant meaning. If I back this out to a 1-hour chart, right, you'll take a look and you can see what it did. Okay. Great, just put it back to the lows for the week. All right, and just still in the same spot as the market has been now for almost 2 weeks. We have been dealing with a market in the same spot for about 2 weeks now. And I know we turn on the headlines, everyone's talking bullish and everything else, that, the bulls are out of control and all of that. But we're 2 weeks in pretty much the same spot, right? So the market's off the highs a little bit and, off its lows here as we saw some monster volume come in. And you can see we had a 50,000 K candle. We don't see that very often, but if that's not bottoming volume, I don't know what is. And we saw that come on in, and we can see the markets had a nice little rebound here off of the lows. But we do have more stocks in the red than in the green. And so it begs the question, are some of the metrics shifting or some of the metrics changing on this move? Well, bullish percent index is down 0.5%. Not exactly a game changer when it comes down to it. The advancers versus decliners, well, we have more advancers today than decliners by 172 on the New York Stock Exchange. So more stocks that are in the green today than are in the red. Even though the market's down what? The S&P is down 20 points? 18, 19 points, right? We have more stocks that are in the green. That's pretty incredible. What about the New York Stock Exchange, the NYA? Well, it's red as well, but again, more stocks in the green than in the red. We are seeing some sell-off in, some of the bigger names, the Apples of the world, pushing on down, getting hit a little bit. Some of the stuff that's a little more coronavirus related, getting hit. But, then you look at things like Caterpillar. Yeah, it's holding up just fine. You look at things like FCX. Okay, holding up just fine. Yeah, off its highs, but it's not one of those days where you look at the metrics or you look at the market and you go, "Wow, this is game changing here." For the market. When we look at the number of stocks above or below some of the key moving averages, something like the 7-day moving average, right, which is the most sensitive, we're still 50-50. We have half the stocks above, half the stocks below. That's not indicative of a shift in control. Yes, are there a few more cross downs below the 20 or below the 7 today? There are, but we're not seeing a lot of breakdowns below the 20. We still have 67% of the stocks that are trading above their 20-day moving averages, which is a very bullish, very healthy number here as far as that goes. What about some of the performance metrics? Well, we have small caps that are in the green today. So the S&P is down. The S&P is down one of its worst days in a while, right? And we have small caps in the green. Okay. We have transports in the green. Transports are having a pretty good day, right? They're doing pretty darn well today. So when we look across the board and we look at the overall metric environment, it's not shifting. It's not changing. It's not suggesting that what has happened with the report is this super catalyst for the market and it's next big windfall, right? Now we do have the Qs, and the Qs are lagging, obviously tech, and we are seeing that lag here. So it does look like this is what? This is a little bit of a profit-taking sell-off. That's what it looks like, this coronavirus. That's all it looks like is some fund managers, decided, okay, we're going to trim a little bit. And what have we seen each and every time that fund managers decide to trim a little bit? They go, well, I got to get back in. There's nowhere else to put this. So let me go buy something else. So it's just one of those where no real metric change here. Now, for the challenge, we don't have any new signals. MGM, I thought, was going to signal here. It's one that just before I got on video didn't have the 3-7 crossover. It has it by 1 penny right now. So this is something that it could actually trigger in the morning. But what's interesting about MGM is then you look at Las Vegas Sands. Well, it's got a downside crossover while MGM has an upside crossover, and we see quite a bit of that out there in the market today. Intel helping to drive the tech sell-off here today and, putting that pocket of weakness out there. But, no real signal or trigger there. If we just come in and look at the, crossover scans. We have Juniper on the upside. Tech's lagging today, and Juniper's leading. Go figure, but no real signal. JP Morgan, which we already have, Kohl's, MGM, Valero, and U.S. Steel, but none of these have a signal on them. The downside list is very similar to what it was this morning, and no real signal here. Apple, EM, EWW, Intel, Las Vegas Sands, Pepsi, and Vale. Apple was one that, I was kind of surprised yesterday. You might have noted it in my voice in the afternoon video. I was slightly surprised we didn't see a bullish trigger on Apple yesterday with the, the nice little move that it had. But the consolidation risk component was just very high. So wasn't able to go get in. We do see it with a little bit of a downside crossover here today. So I'm wondering if we get another upside crossover tomorrow and what that reading could possibly be here, for Apple. But we'll take it as it comes. But interesting stock indeed. So while yes, there were some fireworks when it comes to the coronavirus report. It's not something that is really creating a big metric shift in the markets or even a magnitude shift that you go, oh, wow, something's off, something's different, something's unusual here. Could it come and fill and retest the lows? It sure could. But what have we seen on these coronavirus sell-offs? They're singular. They're one sell and then go. And that has been the case since the coronavirus started, uh, all but for a couple of days when we saw the action where we did see a couple up days after the two down days. Then we saw one more big bad down day. But any of these smaller dips that have happened since this kind of rebound back, uh, they've all been bought up, and they've all been bought up sizably, and pushed to new highs. Now, is there some concern with this big tail on the market right here? Yeah, there is. From a technical standpoint, that is something where when you are looking at something that's overbought and you see this big stretch down, it's something that tells you the top is close. The top is very close, and should these lows get wiped out, we could see some trouble. Right. One of my favorite patterns to trade is a ladder bottom. Okay, and a ladder bottom is this element of downward trend. We have things selling off, selling off, selling off, and then we get a gap down. Okay, then we get just a gap down and sell off. Right. Then we get this day where the market opens up and then, or the stock opens up and then rallies. And it looks like it's going to be a big, bad, bullish, engulfing candle and off to the races. But no, what happens? Into the close, it sells on off all the way down to where it opened. A lot of people look at these and go, well, that's a pretty ugly thing. But a lot of times what it is it's the last of the sellers selling. They're using that rally to sell. And what happens is you just run out of sellers. You just run out of sellers. And so the next day you tend to see a little bit of an uptick. And those become the buy areas for something with a ladder bottom. Now, this isn't picture perfect ladder bottom. This is just the general principle there. But if you look at what the market's doing here today, it's kind of similar, only in reverse, right? Only in reverse here. Had a nice little gap up yesterday, close, a little bit of rally, and today kind of gapped down a little, and that kind of hard sell that has ultimately come on back. Is this the last of the buyers buying the dip? There's nothing about today's action that would suggest yes or no. It's the subsequent action that would. And so while I do not look at today's action as pivotal in and of itself, it could ultimately be pivotal should we put some interesting candles here to the downside after this action. Now, what throws that argument out the window completely? Well, we're looking at the SPY. What about the IWM? It doesn't have anything like that. Nothing even close. What about transports? It doesn't look like that, right? It's just one of those where, the S&P has a certain image in terms of the chart, but it's not what everything else looks like. So to go and to look at the S&P and say, well, this is the candle, and boom, and put a lot of analysis and a lot of expectation on it, I simply can't do. Ultimately, could it turn into it? Yeah, and if it starts to tomorrow, we'll talk about it. But in and of itself, because it just simply does not look like the rest of the market, very difficult to try to make some sort of assertion there. And I know there are several of you out there that want to be very grisly and want to be very bearish and are looking for that moment. And anytime there's some seller going, is this it? Is this it? Is this it? And look, there's nothing today that suggests this is it. And why do I say that? I say that because the metrics haven't shifted. And when the metrics shift, I'll be the first one to jump on and talk about it. We talked about the metric shift that we saw in the market right here before kind of this mini sell-off that it had, and then the metric shift that it had on this mini rally that has seen significant buying since. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.